Hey traders, checking in on the stock market today. Fear picking up out there as we see continued pullback, and a day like today when all of our sectors are dropping at the same time again. Certainly led to the downside by QQQ, as has been the case recently. What can we be looking for to have any kind of confidence that a temporary bottom may be set? We'll look at that in the short term, and I'll look at the longer term perspective as far as what we need to see as well. So a big bear day out there with a lot of big bear volume. We can see SPY drop down to a daily lower low. The daily downtrends on these charts remain the most important factor in the short term. We know as long as we keep setting daily lower highs and lower lows, the bears are in control of the mid-term. And again, we need to have a perspective where we're looking at all time frames so we know the most likely scenarios on one time frame, because we can be looking in different directions based on certain things. So for example, SPY is looking for a monthly high or low. We have not even started monthly consolidation. So that's not a good example. Let's use QQQ, which is getting all the attention because of its weakness. We are looking for QQQ monthly high or low, anything above 260. So we could drop another 10%, and we're still looking for that to set a monthly high or low. So I know that's bigger picture, and a lot of these names, NIO, Tesla, all these ARK ETFs, monthly high or low, most likely scenario. That being said, on the daily time frame, next time we bounce, we are just looking for a daily lower high. And we can be looking bearish on the daily and bullish on the monthly. And again, that's where a lot of newer traders stumble and get confused, because you can have different perspectives on different time frames, and it's important that you focus in on what is the most important time frame to you and the trades that you are taking. So when we're looking at SPY, the hourly downtrend is clearly favoring the bears in the short term. On this bounce at the end of the day, we're just looking for anything under the high of the day to be another hourly lower high. SPY is continuing to hold up a lot better than QQQ as long as XLF is in a daily uptrend. So bulls are hoping to form another higher low, anything above 32.19. We need the bulls to change the trend on the hourly back in their favor on XLF for that daily higher low to be set. And again, just keep it in mind, if we see a loss of the daily uptrend on XLF and QQQ is not making a notable daily bounce, that is a huge red flag for the S&P 500. That means another leg down of weakness can absolutely occur. So very important to pay attention to these daily higher lows on XLF. IWM, daily bear break as well. Increasing volume, weekly time frame, all about 204.84, trying to maintain the weekly uptrend. So the weekly higher lows are what we're watching here. And we can break the weekly uptrend on a straight shot. You know, I'm much more confident in monthly higher lows forming in these names than I am in weekly higher lows, just because, again, the amount of space certainly dictates what the probabilities will be. But for now, that weekly support is still holding, and we're watching closely. Can the bulls set up a daily trend change to set a weekly higher low? And at this point, we know the bulls have a ton of work to do. They have to confirm an hourly trend change. When they confirm an hourly trend change, we just look for a daily lower high, anything under 226.71. So we're in a scenario right now where normally in a bullish market environment, you see these bounces on the daily, you expect a higher low as the most likely scenario. And obviously we're not getting that, and the big clue is the volume. It's the increasing bear volume that's having us see these big bounces and drop to lower lows. And we saw that on the hourly time frame today for QQQ. Big bounce this morning. 305 up to 312. That's a 2% plus bounce. And then we dropped straight to a lower low. Powell was talking, so that definitely had an impact on some things in the short term. But the bottom line is, we are clearly, obviously you don't need me to tell you this, but we're in a different market environment where normally those higher lows would be forming, and obviously at this point we're dropping to lower lows. And that's why stop losses are so important, because any bulls that are assuming daily higher lows are coming after these big bounces are now in a world of hurt. So again, stick to your stop levels and know that you can always make another attempt. If I'm trying for an NIO monthly higher low and I don't want to enter a stock that's in free fall, you know, I can try and maneuver around to play some of these hourly oversold bounces, sell half a position, stick my stop under the low. If I get stopped out, great. I'm back to all cash. I didn't lose much, if anything, and then I have another chance tomorrow to make an attempt to try and start establishing a position for a longer term time frame. So always use these stop levels, because that's another thing that's going through my head. I look at this monthly chart for SPY and QQQ and I say, oh man, this pullback has hardly even started. The daily time frame, it looks like it's the end of the world. The monthly time frame keeps my perspective saying, well, we could drop another 10%. There's nothing saying that we can't do that. And that keeps me in check from getting overly bullish in this environment. Hourly downtrend is the most important factor when I'm day trading. Daily downtrend is the most important factor that I'm watching on a week-to-week basis. And the longer-term uptrends is the most important factor to determine, are we still in a bull market? And for me, if we're in monthly uptrends, we're still in a bull market. So, QQQ needs an hourly trend change. I almost made a terrible decision today, and I did make a terrible decision, and I very quickly recognized that. I watched this morning bounce play out on QQQ, and I had a little bit of a bias develop. And I was looking at this NASDAQ 100 USD, which is the futures chart here, and I was watching this falling wedge, which is still in play. And I'll show you why I'm watching the falling wedge in just a second. But this is the pattern that I was keeping an eye on. It's more of a, you could draw it a number of ways. You could draw this broadening channel. I could draw a closer downtrend resistance line hitting the recent action. Either way, what I care about right now is the support. So I saw that support, and we had bounced off of it and held it in the morning. And it was a big bounce, like I said, 2%. So I looked at that and I said, okay, bulls are proving it. I think we might change the hourly trend. And I went to cover my QQQ short, which again is my protection in my portfolio. And we saw the 15-minute time frame get real tight. Cup and handle on the 15-minute confirmed. I covered at 312. And as soon as I covered, I said, what are you doing? The hourly trend has not changed. We're going to have to pull back to form an hourly high or low. Don't be dumb. And I rebought my short in the 311.90s minutes later. And then we dropped $12, and I realized how close I was to making a terrible mistake. And it was, again, just me being caught up on the 15-minute time frame. And then as soon as I realized, oh yeah, a lot of work still needs to be done on the hourly to even consider the bulls having any short-term control. And that caused me to very quickly jump right back into that short. And again, still holding it because that is my protection in my portfolio. And I really, what this pullback is making me realize is I love being all cash. It's not worth it to have swing positions for me. And, you know, my swing position cash is oftentimes sitting there as I'm not actively trading with it, but it is so much easier to enter the morning not caring in the slightest what direction we go. So it's just a constant reminder for myself how much more I like day trading than swing trading. Because the last week plus has just been constantly offsetting, working to offset pullbacks in positions. So we'll keep an eye on this downtrending line on the NASDAQ futures. We would need to see a 4-hour trend change back to the bulls, or even an hourly. Just an hourly trend change back to the bulls to be watching this line. Why am I watching a falling wedge potentially shaping up? Because that is how our weekly higher lows have been set on QQQ on this entire COVID bounce. And it's just bear breaks that start to lack follow through. This is one we were watching back at the end of January that ended up breaking bullish. There was another one on the 12-hour time frame. We were watching this falling wedge. Some of you were watching it with us. We appreciate the continued support. This was a really good one we were watching back then. So that's why I'm paying attention to these downtrending support lines, because they have come into play time and time again, and they help us determine short-term bottoms. Keeping in mind that we could bounce off the one that I just drew, and then we just zoom out and look for a daily lower high to reject from that resistance line. And that's the thing. Once we change the hourly trend, bears will be patiently waiting for a daily lower high to short yet again. So we're going to be paying close attention to volume. But the bears have complete short-term control. And again, bigger picture monthly time frames, we can pull back another 10% because some of these charts have not even started monthly consolidation, such as SPY. So financial sector, we know the daily uptrend is key. XLV has been the weakest of the major sectors. It's about to hit daily oversold. and we're looking for a monthly high or low. So as a trader, when I'm looking for an hourly high or low in an uptrend, I'm looking for 5-minute oversold conditions to start scouting the hourly high or low. When I'm looking for a daily high or low in an uptrend, I look for hourly oversold conditions to start scouting a daily high or low. Here we are in a monthly uptrend, and we're watching daily oversold conditions, and we're going to be scouting for daily oversold conditions to potentially be shaping up for some monthly higher lows. Again, one time frame at a time, but the more beat up the daily gets, the more I'm looking for a bounce in the short term, keeping in mind daily lower highs will be the most likely scenario of any bounce. And that has helped from getting overly aggressive. Last time QQQ bounced, right here, we were talking about looking for the daily lower high sometime in the next couple of days. And we said it, and the bears have had complete control since. Daily lower highs are very important. The bulls must confirm a trend change if we're going to say, okay, our bottom is in for now. As long as we're in a daily downtrend, we cannot make that statement. So XLV, we don't have much nearby support that's very clearly established. Next level is 109.37. I guess that's close. 107.84. So 2 weekly support levels to be watching. But again, when you get in this kind of high fear environment, and it's another reason why I don't like swing trading, you can have the best sector, the most confident bulls, best sector, best fundamentals, but the correlations in the way that these markets are traded with automated bots, you're going to drop hard if the broader market sees a wave of fear. A wave of fear links everything up and drops everything. And that's what we're seeing right now. XLF is still doing a great job of holding on, but when you're looking at all of our little subsectors, things are getting beat up significantly. So when I look at something like XLV, yes, I can look back at previous support, but we're not going to bounce off this previous support. We're going to bounce when QQQ bounces and when we see, hourly trend changes to the bulls. We're not going to bounce when XLV hits 109.37. If XLV hits 109.37, right when QQQ starts bouncing, then we're going to bounce off that level. So that's how I often view the market as well. When a sector is dumping, the individual name can have a clear support level, but that clear support level means nothing if the sector as a whole is seeing high volume and a pullback. It's the ETF that has to get the bounce, whether it's QQQ or whatever you're watching, has to bounce for the individual name to bounce. Biotech sector is getting crushed. Daily RSI is just now getting oversold. We are looking for a monthly higher low with a lot of space for it to form, but there's a lot of space to continue pulling back as well. So we'll watch to see if we can get a daily oversold bounce. But again, we are definitely in the same grouping as QQQ here with the biotech sector, and we have to see QQQ bounce if we're going to see XBI bounce, in my opinion. Anytime any bounce from here, I should say, we are just watching hourly lower highs. So how we open tomorrow is going to be very key. If we see a lower open, the high of this afternoon's bounce attempt is going to be our most important resistance level. If we see a higher open, we know that we have to pull back, set an hourly high or low, and then get followed through into the end of Friday to confirm hourly trend changes. And then we zoom out and scout daily lower highs. So again, it's a long road back to the bulls being back in complete control, and we can always see another leg down, which is one reason why in the last video, I suggested, not necessarily just scaling into weakness, because it can always pull back more than you think. I want at least a little bit of confidence that a temporary bottom is in if I'm going to start looking bullish with any conviction. SMH, clear, big drop, big bear volume. Weekly, support level lost. Weekly EMA 12, being lost. We got one more day, but currently being lost for the first time since a year ago. That is notable. But we zoom out and we have all the space in the world for a monthly high or low. What I'm now watching for on names that have such significant moves from the last year and starting monthly consolidation, retracement sizes. I want to know, are we favoring bull flags and continuation, or are we going to pull back significantly enough on the monthly that we're going to scout a monthly lower high to be the most likely scenario next time we bounce? And that's the case for QQQ now on the weekly. QQQ is pulling back to the point where, just like last time, we pulled back significantly and we anticipated a weekly lower high was the most likely scenario. So we're getting to that point again, where even if we bottom tomorrow, we will just be looking for a weekly lower high compared to the all-time high into end of March or early April. So a lot of work for complete control back to the bulls. There are plenty of time frames to be scouting lower highs, whether it's the daily, the hourly, the weekly. Bears have short-term control. So SMH, we got the hourly downtrend, little bounce into the end of the day, nothing significant. Have to change the hourly trends. If we don't change the hourly trends bullish tomorrow, we're heading into the weekend with fear still very significant and notable. TAN dropping to the lower low on the daily, the weekly time frame pulling back significantly, and again, first monthly consolidation we've seen any time recently, and we're looking for the monthly higher low. You show me this chart and you tell me that's a daily chart or an hourly chart or a 5-minute chart, I tell you that's a bullish chart. And say, yep, we were way overextended, consolidation certainly anticipated, and this is it on log, and that's a very bullish chart. Drop down and lose the EMA 12, and we then look for a monthly lower high to be the most likely scenario next time we bounce. But again, you got this as solar, you've got NIO and Tesla, the EV names that are very similar as far as where we stand on the monthly right now with it still being healthy, and then all these ARK ETFs. You look at the monthly time frame, there are no red flags. So all depends on what time frame matters most to you. As a day trader, the monthly time frame doesn't matter much to me at all. I care about overextended levels to the downside to be scouting bounces if we reach extremes and we see gap down opens. But other than that, I'm not looking for a bounce tomorrow because we're looking for monthly higher lows. I'm looking for a daily trend change to set up sometime in the next few weeks because I'm looking for a monthly higher low. USMJ, bear break. So what this does, we were looking great for potential month or weekly bull flag. The weekly bull flag became a lot less likely this week. Still very easily in a weekly uptrend, anything above 40.33. But when we do see a bounce and a potential daily trend change, we will be watching for the potential of a weekly lower high compared to 55.91. We have earnings approaching next week and the week after. The market environment is just as important, in my opinion, as what the individual numbers are as far as a short-term reaction. So if we are still in a fear market environment, the bulls are not going to be as forgiving. When you're in euphoria mode, it doesn't matter what the numbers are. We go up. That's what Canadian MJ just did because we were in a very euphoric market still. So that is important. If we're still in free fall in this market and we start coming out with these USMJ earnings, it's going to be a sentiment drag on those reactions. The VIX breaking our recent high of 31.20. And we're now looking at 37.50, the high from back in January. And again, the notable strong days when all of our sectors are dropping together. Although we did see a pretty solid upper wick, it is just looking for an hourly higher low. The dollar has confirmed the weekly trend change. So again, the narrative would have you believe that the dollar is just going to drop all year. And that's why narratives are so secondary to charts and psychology, in my opinion. We've been talking about the dollar looking bullish for a long time. It didn't do anything for a long time. And it's not like I'm bullish the dollar. It was just the narrative it was just knowing the narrative and saying, okay, everybody's been bearish the dollar for so long. We know that's what everybody keeps talking about, printing and stimulus. We know the stimulus is coming. So we get to a point where everybody's on one side of a trade. It's a crowded trade, and it's time to look the other way. And the fact that we had very key long-term 88.25 support coming into play, and at the point in time when we hit that level just above it, we were in some extreme conditions. We now have a weekly trend change. So what do? We zoom out to the monthly. We scout a monthly lower high, anything under 94.74. And we're going to need a lot more bull follow through if we're going to believe that our 6-month higher low has been set. If it has been set, we can trade within the 6-month equilibrium for another 2-3 years. If we change the monthly trend bullish, which again is going to take until June, July maybe, before we know if that's going to happen or not, then I'll say, yeah, 6-month high or low is set, and then we scout the lower high. But with that, commodities are taking a notable hit. Gold is still extremely weak. The 4-hour is barely clinging on to a potential falling wedge type pattern. The bulls must show up in the near term. And again, I am still in my metals positions, and it's not good. It's not a good example of discipline, but when I look at GLD, and again, because it's my swing trading position sizes, the support level that I was playing off of was 166. And with where we stand today, by not stopping out, because I'm not going to stop out in daily oversold conditions, especially looking back historically at how long we stay daily oversold, which is not often, I'm down a half a day maker right now compared to if I had stopped out at that level. So again, position sizing gives me a lot more leeway on this. Now, if I were averaging down and now my position size is going up, then I'm exposing myself to a lot of risk, and that's where it gets dangerous. But as long as this position size is this small, and as long as, this most recent 5-day drop, I can offset with a half a day maker of a day trade, I'm not concerned about it at all. But that's just me personally and where I'm at with these current positions, because if they were sizable positions, I absolutely would need to stop out when the support level I'm playing off of breaks. So the weekly time frame for silver is still an uptrend. Anything above 24.01, it's a much better setup than gold, but they are both weak with this dollar strength and with the general fear in the market. Big day for the oil bulls. Very impressive. To keep this uptrend and completely disregard any market weakness, we often see oil and the S&P 500 correlate, and that's certainly not the case recently. So a new daily high or low is 59.24 being set, and the higher highs just keep continuing. So that's going to remain our guide, the daily uptrend, and it is still intact at this point after a very bullish day today. Natural gas daily bear flag is confirming. Not really seeing any follow through at this point, and we know we're scouting a weekly high or low with a lot of space for that weekly high or low to form. But we will need to see the bulls regain the daily trend in their favor for that weekly high or low to have any confidence. So didn't do a whole lot of day trading today, but I want to see fear tomorrow. I want to see a big gap down. I want to see a gap down. I want to see a flush first thing, and then I want to be looking for bounces. If you give me my ideal morning, that's what I'd be looking for. But other than that, again, I'm staying very cautious. I like playing bounces a lot more than I like shorting, but I will be shorting daily lower highs when we get bounce follow through from here. So going to be practicing playing in both directions. And again, just tightening up a little bit, because this is the euphoria popping, and this is where we need to tighten up to ensure that we do not give back profits from previously in the year. And certainly this is where bears look to make their year. There are traders out there that have bear leans and trade better bearish. My edge is an oversold bounce. Someone else's edge is shorting lower highs. So it all depends on what your style is as a trader. But there is opportunity in both directions. That is for sure. These big bounces have great gains as long as you protect them and don't allow yourself to assume that the trend changes are going to take place because of the size of the bounce. Because I definitely would have assumed that QQQ would set an hourly high or low this morning due to the very high volume on the bounce comparative to the previous days and due to that quick 2% bounce. And obviously I would have been dead wrong. Protect your capital. Establish your game plans. Write them down. If you want to start scaling into some longer term positions in daily oversold conditions, that's certainly a much better time to be doing it than when we're in maximum euphoria and just going up day after day after day. So the risk to reward, in my opinion, is better in daily oversold conditions, ideally with something still in a weekly uptrend. If not, then settling for monthly uptrends. But again, your individual name is not going to bounce with any meaningful follow through unless the broader market, and in this instance, QQQ, bounces as well. So I can be looking at NIO, and I can be looking at a very critical support level coming nearby, but I know that we're not going to bounce off that support with any meaningful follow through unless QQQ is doing the exact same thing. So watch those correlations because they are most important in fear environments. Shout out to Google. Look at this weekly chart for Google. It's extremely bullish. We're coming off the all-time high. It's still a weekly bull flag. Look at the daily chart. You wouldn't know there is anything wrong in the market right now. That just deserved a special shout out where if QQQ can find a temporary bottom anytime soon, Google is positioned really well to be looking right back up at those all-time highs. That's about it. Hope you have a good rest of your day. Oh, one more thing on a lighter side. So this is a Chart Guys member, Julian, and his YouTube channel is Kinetic Finance. And he put out a video where his rabbits are going to be picking some stocks. It's all in good fun. He's donating money to charity. So if you want to click the link in the comments of this video where I will put it, give him a follow and give him a like and a comment and all that good stuff. He puts time and effort and makes good content. And it's worth paying attention to, and that would be appreciated. Do good things. Have a good rest of your day.